Good evening to you. Welcome to The Bottom Line, a wrap of the business news for the day. And we're looking ahead, of course, to Budget 2020. In less than 24 hours, Finance Minister Tito Mboweni will unveil government's plans for spending for the year. And the big question is, where will the money come from? Since government already has loads of debt and there's not enough money coming in to cover expenditure, there's speculation that there could be some tax changes. So throughout this week, we've been looking at different aspects. Let's look at taxes now. Some of the major taxes as they stand at the moment. In fact, we'll bring you that as soon as it's ready, but I can tell you that corporate income tax is 28%. Now that is above the African and the global average. Mboweni is not expected to raise corporate taxes. Even a little increase could be a deterrent to companies to expand and invest in South Africa. There may be some changes when it comes to income tax, which ranges from 18% to 45% for high earners. The minister might hold back on bracket creep, meaning that the brackets won't necessarily increase in line with inflation. Now that means if you get an inflation-related wage increase, you could find yourself in a higher tax bracket, and just that move could raise about 15 billion. Okay, so we've looked at corporate income tax as well, and let's move on to VAT, sitting at 15% at the moment, and it's a very big hot potato is VAT. VAT, or sales tax, was raised from 14% to 15% in 2018, which was the first move in democratic South Africa. The problem is that VAT hits the poor that spend more of their salary on food and goods. Although there are, of course, zero-rated goods, given the controversy last time, it will take a lot of political will to get a VAT rate through this time round. All right, let's get a global investor perspective to discuss Budget 2020. We're joined by Peter Attard Montalto from Intellidex. He joins us via Skype from London. Peter, thank you very much. Let's start with taxes. You'd think a VAT hike could raise a lot of cash, but you say it's not a panacea. Let's start there. All right, so apparently we've just lost Peter Attard Montalto. We'll come back to him as soon as we can, and looking at the various options for Finance Minister Tito Mboweni tomorrow, as well as coronavirus, which has sort of muddied the market reaction. We can't tell what's happening, linking coronavirus, affecting the rand, affecting the JSE, and what's sort of the budget blues, some pessimism ahead of the budget speech tomorrow. Okay, we have Peter Attard Montalto back on Skype. Peter, I was asking you about VAT, which you say is not a panacea, even if there is a VAT increase.
Good evening. Well, I think the key worry we really have here is how you fill a hole, basically, in the budget as growth grinds lower, measures that don't damage the rest of revenue from government, measures also that don't damage growth in themselves, and basically the cupboard is completely bare. You're going to have some impact on existing buoyancy, as it's called. You're going to have some impact on wider growth. The question is, what's the most efficient way of doing that? And I think a VAT hike probably isn't the most efficient way of doing that. Having what's called fiscal drag, meaning that personal income tax levels and bands don't go up in line with inflation, is a better way of doing that. But basically, there are no simple options here. And as a result, dramatic things like VAT are probably being considered.
And VAT would involve a lot of political will. Do you think there's any appetite to do this again, given the controversy there was in 2018?
So the problem in hiking VAT is that in gross terms, from the simple amount of money, 1 percentage point hike would raise is maybe about 23 billion rand or so. You then have to start thinking about the political reaction against that. You would have to start increasing further numbers of zero-rated goods, for instance. You would have some reaction against people paying this. Some step up, as we saw last time, this happened in 2018 in VAT refunds as well. And the net amount that you would raise would be quite a bit lower, maybe around 15 to 17 billion rand. On top of that, the political fallout that you hint at, I think it would be very odd. It would make Ramaphosa the first president in a long time to hike VAT not once but twice in his term. I think would be rather dramatic versus these other options, which are more subtle, hidden somewhat in terms of bracket creep, that inflation erosion coming through, or things like cutting underspending. The department's inability to spend money isn't great in terms of service delivery, but is less politically dramatic than doing a VAT hike.
All right, so you're not expecting drama around tax. Now, what about where the money is going, the expenditure? Ramaphosa spoke about a sovereign wealth fund, a state bank. Are these going to become realities with proper allocations or not?
Well, there's a huge amount of contestation, of course, in the middle of every year when budget expenditure negotiations happen. They happen from June to August every year into the medium-term budget. They don't happen into February budgets. And I think that's what people forget about this, about the budget cycle now into February. These are not big set-piece negotiations that Treasury has. And as a result, cutting and changing expenditure is very hard. That's why the 1% extra expenditure for the youth unemployment interventions is only going to come in the MTBPS. And not now. But you said there are these things that have been promised for the budget, like a sovereign wealth fund. There's simply no money in the budget at all to do this unless you're going to start fiddling with existing allocations and moving things around. For instance, there's 9.6 billion expected in the next fiscal year from mining royalties, but that's tiny. It has no particular impact in conceiving of what a sovereign wealth fund would do. A sovereign wealth fund is going to be a really long-term thing as oil and gas revenues come on stream, for instance, as there are new royalty taxes and dividends from things like that. I'm not really expecting anything at all to come on that front. On a state bank, that's much harder. It's hugely expensive to set up a bank, actually, in terms of the systems, the compliance requirements that are needed. I think there'll be some broad discussion of that, but certainly no money really allocated in any meaningful sense.
Peter, some of our viewers are worried about the buzz around possible pensions being tapped to pay Eskom. Do you think that's a worry? Do you think the finance minister should be very clear about where future money for the likes of Eskom and other SOEs will come from?
So I think there are different things on this front. There's firstly tapping money that's held in pension funds like PIC. That is the Kazatu plan, of course, was presented. That's now been, I think, taken off the table by government. And the pushback the government provided to Kazatu in NEDLAC, I think now pushed that really onto the back burner. I think Tito will say tomorrow some more encouraging words around not tapping people's pensions, particularly state workers' pensions, and pushing back the idea of prescribed assets. But let's not forget there's a huge amount of tax that's, of course, called tax expenditure that's made in terms of medical tax exemptions, pension tax exemptions, which accounts to over, I think it's like 120 billion rand a year. There are possibilities to cut some of those allowances to provide some extra spending room for additional bailouts into the Eskom and into other SOEs. But again, that's hugely challenging before we have any detailed conception of NHI, before we have the funding wrappers announced around that. So I'm not really expecting that tomorrow, but in the long term, that certainly is an option of where more tax money for bailouts can be found.
Finally, how do you read the market ahead of budget? I was saying it's hard to tell what's linked to coronavirus, what may be linked to budget. Do you think there will also be a muddying of those waters tomorrow after the budget?
Well, the markets really struggle, I think, to actually understand what is good and what is bad. And I think that's really because of the MTBPS. Let's not forget back in October, there was such a negative shock of what was actually proposed that the market sort of thinking if we get back to the levels of the deficit of the debt of the MTBPS, that's okay. But actually it really isn't. That's still a deeply unsustainable fiscal position just to get back to that point, considering, remember, we're revising growth down now. There'll be additional revenue holes appearing given lower growth from load shedding, also lower global growth, in part, as you say, because of coronavirus as well. So I think the market really is confused about what is actually positive and what is negative. And I'm expecting overall the market to react okay to what comes out and some of the action that's done. But really, I think the budget will struggle if it's not, in credibility terms with the market, if it's not cutting public sector wages, which I think is unlikely really to be announced, and if it's not meaningfully consolidating beyond where the medium-term budget was.
All right, so not expecting any sort of celebration tomorrow, but thank you for your analysis. That was Peter Attard Montalto from Intellidex joining us via Skype from London.